Why do 95% of crypto investors still fail, even when the cycle is completely predictable? Why do millions of people buy the top, panic sell the bottom, and then watch the market recover without them? And here's the real question. Why do the same mistakes repeat every 4 years, even though the entire cycle is visible to anyone willing to study it? Because the truth is uncomfortable. Most people in crypto think they're trading markets, but they're actually trading human psychology. And until you understand the hidden structure behind the crypto cycle, you'll always feel like the market is random, when in reality, it's anything but. Today, we're breaking down the crypto cycle secret that most investors still don't understand. The same pattern that has quietly created every major Bitcoin rally, every altcoin explosion, and every brutal crash since crypto began. Once you see it, you can't unsee it. And more importantly, you start to realize something very few investors are prepared for. This cycle might be the last easy one. So let's decode what's really happening, because the crypto cycle isn't just repeating, it's evolving. First, we need to address the biggest misunderstanding in crypto. Most people think the cycle is about Bitcoin halving events. Yes, the halving matters. It reduces the new supply of Bitcoin entering the market, but the halving alone does not create bull markets. If that were true, prices would explode immediately after the halving, but they don't. Historically, the market stays quiet for months. Then, suddenly, everything starts moving. Bitcoin rallies, media headlines appear, retail investors return, altcoins explode, and before anyone realizes what's happening, the market has already multiplied. So, what actually causes the cycle? To understand this, you need to understand liquidity. Liquidity is the real fuel of every financial market: stocks, real estate, tech startups, and especially crypto. When liquidity expands, risk assets rise. When liquidity contracts, everything falls. The crypto cycle is simply the clearest reflection of global liquidity. And that's why the pattern keeps repeating, because the same economic forces keep repeating. Now, let's break down the first secret most investors miss. Number 1, the cycle begins long before anyone notices. Every bull market starts in silence. Not excitement, not hype, silence. Look back at previous cycles. In 2019, Bitcoin quietly doubled while most people ignored it. In 2020, institutional investors began accumulating. Nobody was talking about crypto. Retail investors were gone. Media attention was non-existent. But beneath the surface, the foundation of the next cycle was already forming. This is the accumulation phase. Smart money enters when sentiment is dead. Prices are boring, news is negative, and most people have already declared crypto finished. This phase feels frustrating. Nothing seems to happen. Months pass, sometimes years, but this is where the biggest fortunes begin. Because once accumulation ends, the real cycle begins. Number 2, Bitcoin moves first. Every single cycle starts the same way. Bitcoin begins to climb, slowly at first, then faster, then suddenly, everyone notices. Why does Bitcoin move first? Because it's the safest asset in crypto. Institutions trust it, large investors accumulate it, funds allocate capital to it, and new money entering crypto almost always starts with Bitcoin. Think about it. When someone new enters crypto, what's the first asset they buy? Bitcoin, not obscure altcoins, not speculative tokens, Bitcoin. So during the early bull phase, capital flows almost entirely into Bitcoin. That's why Bitcoin dominance rises at the beginning of every cycle. Altcoins remain quiet, sometimes even drop. This confuses new investors. They expect altcoins to explode immediately, but historically, that comes later. First, Bitcoin leads, then the rest of the market follows. Number 3, altcoin season happens when retail finally arrives. This is the stage most people remember, the explosive phase, the viral headlines, the life-changing gains. Suddenly, every social media platform is talking about crypto. Friends who never cared about markets start asking about Bitcoin. New tokens appear every day, and some coins multiply 10x, 50x, even 100x. But here's the important part. Altcoin season doesn't begin because altcoins are fundamentally stronger. It begins because Bitcoin profits rotate outward. Early investors who accumulated Bitcoin start taking profits, but instead of leaving the market, they reinvest into smaller projects. Liquidity flows down the risk curve, from Bitcoin to large altcoins, then mid-caps, then micro-caps. This is why altcoins explode later in the cycle, and it's also why the biggest gains happen right before the end, because speculation reaches maximum intensity. Everyone believes the rally will continue forever. That's when the final phase begins. Number 4. The Euphoria phase destroys most investors. This is where 95% of people lose. Not during crashes, during euphoria. Prices are skyrocketing. Every dip gets bought instantly. Influencers are predicting impossible numbers. 500K Bitcoin, $10 Ethereum, meme coins reaching billions. And suddenly, everyone feels like a genius. New investors believe they've discovered a cheat code. They think crypto only goes up. They believe they're early, but the truth is brutal. This is when the cycle is already ending. Liquidity has peaked. Smart money is slowly exiting. Institutions distribute their positions to retail buyers. But retail doesn't realize it because the narrative is too powerful. This phase can last months, sometimes longer, but eventually reality returns. And that leads to the final stage. Number 5, the crash resets everything. Every cycle ends the same way. Fast, violent, unexpected. Prices collapse. Altcoins lose 80, 90, sometimes 95%. Projects disappear. Media declares crypto dead. Again. Retail investors vanish, and the cycle restarts. But here's the part most people overlook. Each crash still leaves the market higher than before. Bitcoin's lows continue rising. Infrastructure improves. Institutions get more involved. Adoption spreads. The industry evolves. So while each cycle feels chaotic, it's actually part of a long-term growth pattern. Now, here's where things get interesting, because the crypto cycle is changing. The next phase may look very different from the past, and there are 3 reasons why. First, institutions are now deeply involved. Previous cycles were dominated by retail investors. Today, major financial players are entering the market: hedge funds, asset managers, corporations, even governments. This changes how capital flows through the cycle. Large institutions don't chase meme coins. They focus on major assets: Bitcoin, Ethereum, infrastructure. This means Bitcoin rallies could become larger and longer, but altcoin cycles may become more selective. The days when everything pumps together may be fading. Instead, capital will concentrate around the strongest ecosystems. Second, market information spreads faster than ever before. 10 years ago, crypto knowledge was limited. Today, millions of investors understand the cycle. They track on-chain data. They analyze liquidity trends. They follow macro signals. This awareness changes market behavior. Some investors will try to front-run the cycle. They'll buy earlier, they'll sell earlier, which can shift timing. But even with more knowledge, human psychology still dominates. Fear, greed, FOMO, these emotions never disappear, and they're the real drivers of every market. So, third, global liquidity is becoming the ultimate catalyst. Crypto doesn't exist in isolation. It responds to the same forces affecting every financial market: interest rates, money printing, economic growth. When central banks inject liquidity into the system, risk assets rise, stocks rise, tech companies rise, and crypto rises even faster. When liquidity tightens, everything falls. That's why some of the biggest crypto rallies have aligned with periods of massive monetary expansion. Understanding this relationship gives investors a huge advantage, because instead of reacting to price, you can anticipate the conditions that create price movement. Now, here's the deeper insight behind the crypto cycle. It's not just about markets, it's about belief. Every cycle expands the number of people who believe in crypto. Early adopters believed in digital scarcity, then developers believed in decentralized applications, then institutions began believing in Bitcoin as digital gold, and now entire nations are exploring blockchain infrastructure. Each wave of belief pushes the market higher. Then the crash removes speculation, but the core believers remain. They build, they innovate, they prepare for the next wave. That's why crypto continues growing despite massive crashes. The technology keeps advancing. And this brings us to the most important lesson. The cycle only punishes people who ignore it. Investors who understand the pattern behave differently. They accumulate when markets are boring. They stay patient when sentiment is negative. They take profits when hype becomes extreme. And they avoid the emotional traps that destroy most portfolios. Simple in theory, but incredibly difficult in practice, because human psychology works against us. When prices fall, fear tells us to sell. When prices rise, greed tells us to buy more. The cycle exploits these instincts perfectly. So what does this mean for the current market? It means something big may already be happening beneath the surface. Because every cycle begins quietly, long before headlines appear, long before social media hype returns, long before the public notices. The early phase always feels uncertain, confusing, uneventful. But this is where positioning matters most. By the time the majority becomes excited, the opportunity is already smaller. Now, imagine looking back 4 years from today. Imagine realizing the signals were visible the entire time. The accumulation, the Bitcoin breakout, the capital rotation, the altcoin explosion, the euphoria, and then the crash. The same story repeating again. Because the crypto cycle isn't random, it's a pattern driven by liquidity, psychology, and belief. 3 forces that have shaped every market in history: stocks, commodities, technology, and now digital assets. But the difference with crypto is the speed. Traditional market cycles can take decades. Crypto cycles can unfold in just a few years, which means opportunities appear faster, but so do mistakes. And that's why understanding the cycle is everything. It doesn't guarantee perfect timing, but it transforms how you interpret the market. Instead of reacting emotionally, you begin recognizing the stage you're in. Are we early? Are we approaching euphoria? Or are we closer to the reset? Those questions change how you allocate capital, how you manage risk, and how you protect profits. Because the ultimate goal in crypto isn't just to ride the cycle, it's to survive multiple cycles. The investors who succeed long-term aren't the ones who chase hype. They're the ones who stay disciplined when the market becomes irrational. So if there's one takeaway from everything we've discussed today, it's this. The crypto cycle isn't a mystery. It's a mirror, a reflection of human behavior, fear and greed, optimism and despair. Every investor eventually faces these emotions. The difference is whether you recognize them or get controlled by them. Because once you truly understand the cycle, you stop asking questions like, why did the market suddenly crash? Or why is everything pumping? Instead, you start seeing the bigger picture, the accumulation phase, the expansion phase, the mania phase, and the reset, a repeating structure that has defined crypto for over a decade. And if history continues to rhyme, another cycle is already unfolding, quietly, gradually, right beneath the surface. Most people won't notice it until it's obvious, until prices are already much higher, until headlines declare a new bull market. But by then, the smart money will already be positioned, exactly like they were in every previous cycle. So the real question isn't whether another cycle will happen. History suggests it will. The real question is simpler. Will you recognize it before everyone else does? Or will you discover it when the excitement is already at its peak? Because the difference between those two moments is often the difference between life-changing gains and painful lessons. If you found this breakdown helpful and you want more insights into how crypto markets really work, make sure you subscribe and stay connected, because the next phase of the crypto cycle may be closer than most people think, and the investors who understand it early are usually the ones who benefit the most.